From public housing in Western Sydney to managing billions for one of Australia's most powerful tech billionaires, Armina Rose, aka Arms, has never played by the rules of finance, and it's paid off. From JP Morgan managing a global equities portfolio for Mike Cannon-Brookes family office, she is now the co-founder of Minotaur Capital, Australia's first AI-led global equities fund. And AI is at the heart of every decision they make, from the brain down. And today we're going to dive into how AI has made their business the investment powerhouse it is today. Let's go.
Thank you so much for joining us on the show today. I know you've been quite busy over the last couple of weeks. You've had a few presentations and episodes of shows. You were on Equity Mates.
Yeah.
Yes. How was that?
Yeah, it was good.
Yeah?
It was good. Very, finance stock focused podcast, but I like those guys.
Hopefully we can be a little bit more focused on some more fun technology type stuff in stage chat.
Do you dive into the tech with talks with those guys, or is it more on the the investment side of
A
things?
little bit. I think on most podcasts, it's been more the investment-y stuff.
Okay, cool.
So yeah.
And why is that? Tell us.
So we run a global equities fund. So we invest in stock markets all around the world. And that's literally very broad. So all caps, all sectors, all markets, all factor exposures. And I think the reason we can go so broad is because we use AI and large language models to go through, the entire universe. So there's 60,000 listed companies out there.
Yeah.
It's actually, there's still 10,000 if you limit that to $1 billion plus market.
Yeah.
I didn't realize that. There's 10,000 $1 billion companies out
It is
there
crazy.
that are listed. That doesn't even include all the private ones.
Need a higher measure.
Yeah, exactly. And so, most fund managers, they get ideas from really random sources. And we use AI to help us with idea generation. We still have those random sources as well. We can add alongside, but yes, that's kind of how we do it.
It's interesting.
I can't wait to dive into the AI aspect.
Oh, yeah.
More and more. It's super interesting what you guys have done.
That's my background as well. Less using AI in capital market space, but doing I'm a former equity researcher, so I kind of know more about that world and doing the different quant and factor kind of models. I wish I had AI 10 years ago to do the kind of stuff that you guys can do now.
Yeah.
Could you imagine what you would be, where we would be now if that was the case?
It would literally be not the Matrix. What's that thing? Minority Report. I'd be doing like that with the meta glasses and stuff, and just moving things around.
Maybe financial.
Yeah.
A bit of ETF there.
It's delete.
Reinvest, sell.
But before we get into that, I guess people that may not know, you've got a really interesting kind of background in terms of your investment kind of journey. Could you tell us a little bit more about that?
Yeah, so I have a very different background, I think, to most bros in finance. I grew up in Western Sydney, grew up in Parramatta. I grew up in housing commission. So my mom came out here. She was a single mother, had 3 kids.
Wow.
And now, having my own kids, I know how hard that is. I just never had a full appreciation for how hard that would have been. And she pretty much spoke.
Single mama.
Single mom, yeah.
Boy, how true. That's amazing.
Shout out to the mum.
True.
Yeah, shout out to the
Indonesian
mums.
immigrant story, or immigrant
Love
story
it.
just generally.
Yeah.
And she was so innovative. I remember we had this old Commodore 64 kind of computer.
Yes.
And I was like, Mom, I want to play computer games. Buy me a computer game, because I was a little brat. And she was like, oh, there's actually computer games on the computer already. You should try it. It's called Lotus 123. And I was like, awesome. And I did these tutorials for Lotus 123. And for any younger people in your audience, that Lotus 123 is the predecessor for Excel, right?
Yeah.
So I was literally learning how to spreadsheet when I was 9 years old.
That was the game that you were
That was
playing.
the game.
She was training you for finance from the get-go.
We like the class accountant. It's no, guys, we can't spend this. Susie and blah, blah, blah. Working out playground finance.
Yeah, playground finance is exactly right. So I, and I think I grew up poor, so there was a need, like every kid who grows up poor, I wanted to be rich. And, I grew up with movies like, Wall Street, so kind of got, glazed-eyed over that sort of scenario. But that was met with a true passion for just looking at companies and looking at stocks and investments. And I've always just been a curious person, so curious about technology as well. And so the intersection of technology and finance is always where I've kind of loved to dabble. And that's how I've been able to bring it together at Minotaur as well.
And the work that starting off was in, was it JP Morgan that
Yeah.
So from there to, I can't remember when you got to Grok and then the other places before Minotaur, but that journey, did it have technology along the way as part of your work
Yeah, sure. So
Beyond loaders and Excel.
It's always been there.
So I was in equities research like you. I started my career at JP Morgan, did 8 years covering Australian small caps. So made buy and sell recommendations on stocks outside of the ASX 200. And that included like early internet stocks. So like Webjet and What If.
Wow.
Car sales and real estate. So that was where the technology, I think, came in. And, Australia has just done so well on the sort of marketplace side of things. And so that's kind of the stocks that I was looking at JP Morgan. And then I joined the family office world after JP Morgan. So I worked for a guy called Robert White. He made his fortune through funds management and property development. And I never knew what a family office was before then. So, a family office is the private investment firm of one super rich family.
Yep.
And they're so rich that they hire like experts to run their investments for them. So worked for him first, running his global equities portfolio. And it was so funny. He wasn't, I'd say, like a super tech savvy guy, but I remember him coming to me, and I don't know where he got this stock tip from, but he was like, there's this company called Shopify. I think it might be worth looking at, like from a stock market point of view. And I think Shopify was like $20 at that time. Like it was, and no one knew what it was or anything like that. So we ended up buying it. Well, I think the funny thing about that is I think we ended up selling it at like $40. It's gone on to obviously be one of the most successful sort of e-commerce software engines in the world.
It's going a bit down at the moment, though.
Yeah.
AI hasn't done too well.
Oh, yes. So we'll get into SaaS.
Exactly.
So did that for him. And then obviously joined Mike Cannon-Brookes, who co-founded Atlassian.
Some people may have heard of him.
Yeah, just that guy.
Little company.
Who's he? No.
Well, so the funny thing, so I started Minotaur Capital, which is the firm I run now with my co-founder, Thomas Rice. And so I'll just kind of run through Thomas's background as well,
please.
because it kind of dovetails with mine, and that's interesting. So he started his career at a place called PM Capital, which was one of the first hedge funds in Australia.
Mm-hmm.
And I was broking like Webjet and What If to him when he was there. And we found we were kind of aligned in investment philosophy and got along really well. So we stayed in touch. And it was actually Thomas who introduced me to Mike Cannon-Brookes.
What the heck?
Yeah. So
Okay,
he met Mike back in 2011. And that's before anyone knew who Atlassian was or who Mike was.
Yeah.
Mike went to a Macquarie internet conference and happened to sit down next to Thomas. And Thomas turned to him and said, "Oh, you're Mike Cannon-Brookes. I use Jira and Confluence in my coding projects." So, one weird thing about Thomas is he's like this kind of unicorn guy because he's an amazing software developer and an amazing fund manager. And like those two skill sets don't usually come in the same person, particularly in Australia.
Yeah.
And so Mike Cannon-Brookes was shocked like that anyone at that conference knew what Atlassian was or even used the tools. And so, they got talking. It led to Mike and Scott practicing their pitch on Atlassian to Thomas the next week.
What the heck?
I know. So I think Thomas was probably one of the first fund managers to hear an Atlassian pitch. And then Thomas, I think Perpetual, where he worked, was like one of the only Australian funds that got an allocation in the IPO of Atlassian, and they stayed in contact. And then when Mike was looking for someone for his family office, he said to Thomas, "Do you know anyone?" And he goes, "Oh, you should talk to Arms." So,
That is crazy.
and then Mike was one of the biggest investors in Thomas's old fund when he was at Perpetual. And so what that meant was I became Thomas's client effectively.
Yeah.
And so we were.
Reverse.
Was he happy?
Yeah.
Was he happy about that? He's stolen my
Happy
stuff
enough
away.
to be a co-founder of mine later.
Yeah.
So,
That's right.
On Atlassian, it's interesting because like when they were smaller, and they weren't small at the time because they could afford PwC as an auditor, but in a former life, I was an auditor on Atlassian in their old offices on Sussex Street. I went to some chili eating contests and just remember having like whatever the Texas Reaper was, and that was fun. I couldn't eat for the rest of the day. But that is crazy. It shows what curiosity does in terms of like just having these connections in the community. You never know where they end up, right?
Yeah.
Jeez.
The thing I love about the market, or the sort of area that you're playing in, is if you look back the history of AI and machine learning and how it's evolved. I mean, there's a few industries where it did originate from, military, all these other places, but finance, particularly stock market, is one of the earliest stages of introduction of AI. If you take it back to machine learning, because you were algorithms, you were predictive markets, all that type of stuff has all come from the finance sector.
Yeah.
So when we talk about AI, we talk about technology, it has like pretty much touched your entire career leading to where you are now.
Yes, that's right. And I think like quant funds have used AI and
Mm.
machine learning forever, right?
Forever,
Every talk about
exactly.
your renaissance technologies and the like. But I think what's interesting is like fundamental equities. So doing research on companies from the bottom up, like that's been a pretty tech light situation for pretty much, the last 3 decades.
Mm.
And I think what you're seeing now is AI and large language models are leveling the playing field between the
Mm.
fundamental guys and the quant guys, because now fundamental guys can like pass through lots of information very quickly.
Mm.
And that's something that quant guys always had. So it's like, I think that you'll see a bit of a blending and convergence between the two.
They become more and more both. It's you're just an analyst. You're an equity analyst, and it's just expected that you have a bit of quant
Yeah.
to what you're doing and stuff. That's fascinating because we see it with other industries as
I
well
was gonna say,
evolving.
It's like the entire, like you look at technology in general, back in, it's only, you have to go back like 5 years, maybe even 3 years, where if you were to build any kind of thing, you had to approach a developer and an architect, an engineer to be able to innovate and create any kind of technologies. And nowadays that, like, this is what AI has done. It's leveled the playing field between, the generalist and the tech guys.
Yeah.
So now we can do things that we've never been able to do before.
Yeah,
Without the
everyone
need
can
of an
build
engineer, everyone can
Yeah.
do it. It's
So there's-
just so much fun.
In that world, and I see it in the legal AI space, and for folks that haven't been paying attention to that space, there's these big billion-dollar companies having the stuff that they build, and there's a whole heap of lawyers. Shout outs to the legal quant community. They call them legal quants. They're not quants as we know it, but very software driven, so hence the name. But they have been a bunch of lawyers building solutions in Word, in other tools to do the things that these bigger companies, billion-dollar companies do. So there's this big question around, well, should I pay for that? When the capability is there? But the difference is those bigger companies have data.
Yeah.
And they've got more experience and process and know how to manage all the risk and stuff like that. And then I guess it gets to the approach that you guys have to, and we'll get into, how you're using AI in your space. Apart from just being in investments and managing all of that, you guys have built your own AI tools, and having witnessed, and we had a great meeting, I think it was last year, where yourself and Thomas showed me like what it was that you guys were building. And I still was using, and still to this day, talk about it as one of the best examples of an application of AI into a complete workflow for a company.
Oh, thanks.
Can you tell us a bit more about, what it is you guys are doing with AI?
Yes, we could definitely. I mean, we use AI for every step of the investment process, and actually all of our operation stuff too, which is a whole other conversation. But on the investment side of things, we start with idea generation. So, taking a step back from that, you start with investment philosophy. So every fund manager has their own investment philosophy, and ours centers around, we think, companies that are going through some sort of change, some sort of like long-term structural strategy change. That's an interesting time to look at a company, because the potential for that company to be mispriced by the market is higher than normally.
Are we talking longs and shorts, like as in buying because you think it's going to go up, or buy as shorting it, and people can look up how that works? Is it for both sides?
Both sides, yes.
Okay.
So a strategy change you could say is good or bad for the company, or you could agree with the company's strategy change or not. But to illustrate with an example, the best performing stock that was in Thomas's old fund, Perpetual, was this stock called Axon Enterprise.
Okay.
And Axon, there was an article in CNBC back in 2017 that Thomas happened to read, and it was about how Axon makes all the police tasers in the world. And he was like,
yeah,
that's interesting. Didn't realize Taser was a listed company. He'd seen The Hangover. He knew what a Taser was.
Right.
And the article was talking about how Axon was using all the free cash flows that they got from Taser, because it was this monopoly business, but investing it into the body camera business. And the way that body cameras worked is they were giving away body cameras to police for free. Police would wear it all day and then put it into a dock. It would upload all the image data into a cloud-based platform called evidence.com. And then Axon would charge subscription fee for evidence.com. So it's probably one of the first examples of a SaaS-based business model kind of ever.
Wow.
And existing investors in Axon hated it because they were used to, this free cash flow business, but it looked like they were wasting all this money on the body camera business. It looked like it was super expensive. If you guys know what like PEs are, it looked like it was trading on a PE of 70 times. But if you stripped out the losses of the body camera business, it was on 20 times. And actually, if you thought body cameras was going to be a thing, it was very cheap. And like body cameras in the US in 2017, like
Oh.
kind of went from like being a nice to have to we very much need this,
Yeah.
right?
So
Anyway,
law now is they have to wear them.
Yeah.
yeah.
So,
I mean, long story short, though, that stock 20-30x'd in the time that Thomas owned it in the fund. But it occurred to him that if he wasn't randomly on CNBC that day, he would have missed his best performing stock.
That is crazy.
So what are the first things we
Serendipity.
do with Taurient, which is the name of our proprietary
Taurient.
AI software?
Mhm.
So Taurient goes through about 35,000 articles a week
Wow.
from
Oh my God.
174 sources. Yeah. And has this prompt that's sits over the top of large language models that's looking for companies that are undergoing some sort of structural change. And like in the old world, the way that would happen is like just through keywords, like looking up the word strategy and change in an article, which is pretty blunt, right?
Yep.
Whereas now, because large language models have the ability to, parse natural language.
It's more semantic now.
Yeah, exactly. It's like you can be very detailed in what you're looking for. So in the prompt is examples like Axon with the new product line, or maybe changes in management, maybe changes in work.
And they can also understand context, which general search doesn't.
Yes.
So, it's stringing, it could be random set of words, but it understands that means strategy or something like that as well.
Exactly. It doesn't have to be a strategy.
Yeah, exactly.
They say like, oh, we've had a wholesale reduction in workforce because we're using AI like a block.
Yeah.
Like that came through the
Exactly.
funnel as an example.
And I guess you're adding in like the things that where it's gone well or not. I remember seeing something where you guys kind of had, and hopefully I'm not giving away too much here because no one can really see. We'll talk about the AFR article where there was a screenshot of something there. But I remember there being this like way, there was almost like a dating app in my head for stock selection where it's like, okay, we like this, swipe right. We don't like this, swipe left or something like that. Does that learning still feed into it and stuff?
Yeah. So what you're referring to is idea triage. So when we do that search on the articles, it brings in effectively a funnel of ideas of companies that are undergoing a strategy change. And it the way that Taurient works is it brings in the name of the company, a paragraph about the strategy change,
Okay.
and then we can swipe left or right on that. So it's funny because that's how we used to do it.
Okay.
Now we can actually get an agent we say, hey, can you bring me 10 ideas in the funnel and tell me how you think I would vote on it based on everything you know about me? And it tells me, and then I can say, okay, you were right about this, this, and this, but you were wrong on this one. And it learns how I, make decisions. And so it's getting better and better at that loop. So that's like the next iteration of that.
So I got something, it's very nowhere near as intelligent, but I do something very similar with my own. I built a little application that
for home
for at home, well, for myself. So it uses OpenClaw, I use Perplexity and a bunch of other tools that does a whole bunch of article scraping as well. Nowhere near the volume that you're talking about because I don't have that much money, but it pulls in a whole bunch of articles relevant to AI so I can stay on top of what's happening, all the trends, like all the latest updates. And then it pulls into a triage, finds the things that it thinks are trending the most, and then presents those articles in like, I think like 20 separate pages, depending on whether it's business targeted, just general, or some other interest that it associates to. Cool. And then I have a secondary thing that automates going, okay, based on sort of what's happening in social media and other elements, what would make the most important or the best social posts? And I have another tab that then highlights like 4 articles that I could post with all the summaries and stuff. And on top of each one of those, if an article comes through, I think this is a bit iffy, I can click on it, say, hey, this is why this isn't right or why this is wrong. And then it feeds back into a sort of a training loop to make sure that it's optimized on what it's presenting.
When we all got Neuralink involved, you just do whisper flow to go, okay, upload this to my Neuralink, and you'll be like Keanu in the Matrix. You just sit there and it's like, okay, now I know it all.
Yeah, exactly. 135 articles. So the reason I brought that up is the show is experts in the loop. So a lot of the thing that you talked about then was all automated. You're all using agents. So is there any sort of human in the loop that's checking it? Because one of the examples is where you mentioned Thomas Price came across that article randomly, right? Like, is there a chance that the AI could similarly miss one of those articles? So therefore, is there someone who is also paying attention to what's happening in that as it's going through it?
Yeah, that's an excellent question. And yes, if there is some sort of strategy change that we see that isn't picked up, then we'll go back and we'll say, how come you didn't pick up this change?
Yeah.
And so we're just self-learning from that. There is a human in the loop at every decision gate. So, I just talked about idea generation. The next phase is we generate like a quick view of the company. It's called a snapshot, and it says like, what does the company do? What are its revenue and earnings drivers? What makes it interesting? What's the bull and the bear case? Can it double in 3 years or 10x in 10 years? Because that's how that's our returns framework. So we're looking for something that doubles in 3 years.
Yep.
And that report used to take one of our sort of investment analysts maybe at least 5 days to do. It probably takes like 2 minutes to do now using
Crazy.
AI. But then like going from reading through that snapshot, like that's a human that reads through that snapshot, like what Thomas and I, and then we'll kind of push it to do further investigation on. And so yes, you're right, there is a human in the loop at every single decision gate. But like I kind of mentioned with idea triage, we're simultaneously training Taurient to like know how we think and why we push those decisions through. And eventually we think that it'll get better. Like
100%.
we think it'll get to the point where it starts to just generate like, here's, a list of 50 stocks that we think should be in the portfolio. Now I think we're a little bit like way away from that. But like, I think what's interesting is we aren't averse to a future where, I'm sitting on the beach with a cocktail in hand and Taurient is running my portfolio for me.
Yep.
And it's interesting with my investor base, I'd say it's split 50-50 between investors who are like, please tell me you're not diluting the AI with your like bad human judgment. That's half of my investors. The other half of my investors is, please tell me you're not just letting AI run rampant on the portfolio and you make sure that you know what's in the portfolio. And I'm like, obviously the answer is yes, like it's
To the both.
balanced.
Yeah, exactly.
But this is all about feeding the expert, you into the loop. But has AI actually changed your investment philosophy? Has it gone the other way? Have you had feedback from it that, things that you might not have seen before, but now because you've got this, not all seeing, all knowing, but you've got a process that does things in 2 minutes versus 5 days, are there things that are affecting the investment philosophy going back up the chain?
Yeah, it's interesting. I don't think so. So like, I think the underlying investment philosophy hasn't changed over the last 4 decades. And, I think one of the benefits of the experience that Thomas and I have is that we are able to embed that investment philosophy into AI. And it's interesting because, a lot of people ask us like, oh, is AI your competitive advantage? Like if everyone had access to Taurient, then wouldn't everyone just do as well as you? And Taurient embeds our investment philosophy, but that's very different to another fund manager's investment philosophy. And I like to say, like, you add AI to a crappy fund manager and they're still going to be a crappy fund manager.
Just amplified. They do crappy things in 2 minutes versus 5 days. That's what it is.
Yeah. Their returns are probably still going to be ordinary. I mean, the other question, we've discussed before that I get asked all the time is, would we ever license out Taurient? And I think the answer is like maybe, but it would require a high degree of customization. So even, let's say another fund manager, let's say they want to look at all of those articles, they might have a completely different question or a different prompt that they want to ask it. Or they might not think articles is a great place to start. Like they might want to start with, annual reports and transcripts and
macro or whatever. Yeah.
Exactly.
Everyone's got their different philosophies.
Correct,
Okay. It's how you use the AI and you guys have done like amazing to be able to be, I guess, ahead of the curve, because at the time and great to see that it's evolved, but at the time when you showed me this, literally I had not seen anyone, and just because I knew the whole, working on sell side, so I dealt with a lot of fund managers, but I never crossed over to that side, but I knew about the workflows and stuff there, so just being so intimate with it, never had I seen anyone, any group use AI as much as it was embedded over here. So again, congratulations on doing the evolution and stuff.
Particularly in the space that you're in, I would say. In other industries, it definitely is occurring, but in finance, like it's pretty innovative what you guys are doing, or investments in stock management.
And even for a space that's been using AI as much as it has, like the pre-GPT kind of AI. Now, going on to the next thing, it's like, where do you kind of see others making mistakes when it comes to using AI, given that you're so well experienced in this?
Yes, I think that there are a lot of people who treat AI as an oracle, not like an investment analyst. So like kind of take every kind of thing that it says as the truth. I think also a lot of people only use like one large language model. Like, you should be using all of the large language models because they're all biased in different ways.
Agreed.
The famous example of like any Chinese model doesn't answer anything about Tiananmen Square. Like even the US models like differ on their answers to who won the 2020 election in the US, and you're like, what the?
It's crazy.
So I think it's like it's worth like using a whole bunch of models, and people don't do that. And then the last bit is like I'd say using source documents. So a lot of people just ask ChatGPT something, and when you ask a large language model a generic question, it goes out to the whole of the web effectively and like gathers information from the whole of the web. And I find that you get better results out of it when you tell it where to look. And
Steering it.
yeah, exactly. So like, with parts of Taurient, like we feed it all the articles, but we also feed it like things like transcripts and, all the company releases. So for any ASX stock, it goes to the ASX, it gets the filings, or SEC, etc., like any exchange. So that's also a really important point as well. But I think the macro point is like, you got to be skeptical around AI, and you can't I guess take the answers that you get as the truth,
So
the source of truth.
Yeah, treating it as an investment analyst, a third, fourth year kind of thing.
Yeah.
So it has to be checked.
Yes.
But it does stuff very fast. So like, it's still very valuable, because I find that, the polar opposites is just crazy, where it's like, no, we don't use AI because we can't trust it because they saw one mistake. Or on the other side, we trust it implicitly, and then something big hasn't happened to them yet, but it will, because it's a stochastic probability model. So that's the middle is nice.
Yes, 100%. So that's the other mistake that people make as well, is because they ask AI something or large language model something, and they get a mistake, and then they go, oh, well, we'll never use it again because it's not trustworthy. And that's like, you can't do that either. That's burying your head in the sand, right? And the funny thing about that, I always find, is like, one question I get asked a lot is like, how do you deal with hallucinations? And, happy to answer that, but you never get asked, like, how do you deal with the hallucinations of your third or fourth year investment analyst who is like this Patagonia vest wearing finance bro who probably doesn't have a lot of context to certain things either, right? Like,
It's so true.
It makes more mistakes.
like I've never been asked. Yeah, I've never been asked like, oh, do you check the work of your fourth year investment analyst? Like,
We never use them again. We put them in the back room. It's like, we don't do that, right?
yeah, exactly.
It's the same argument you see with like with vehicles, right? With the rise of EVs and autonomous vehicles, they have a crash and everyone's like, oh, the vehicles are terrible. It's like, yeah, but people are crashing in normal vehicles as well. It's like,
Have you seen Chris Wright? No.
yes, reversed into a pole the other day. It was sweet. But I mean, even from the simplest point of view, though, like calling out the fact that models do treat things differently. You have, Codex and Claude. Like, there's a discussion that we've had quite recently. In one of our episodes, it's like Claude Code isn't, for example, or Claude in general, isn't up to date with the latest on what's in the internet. You have to prompt it to action something to find it if it is the latest thing.
Yeah, you asked it about like a dispatch. Tell me about dispatch. And it goes, I don't understand what you're talking about. And it's like, look online for the feature that you just released.
It didn't know a thing about itself.
Okay.
Oh yeah, there's that thing.
But we love Claude, by the way. So
We do love Claude. It's the main thing that I use.
But still, yeah.
But so and then to your point though, it's like, okay, understanding where the gaps are, how do we overcome that? And then you start, okay, now I have to make sure I have a different step in place. Maybe I'll do my initial research in something like Gemini or Codex, and then bring that into Claude for to the actions that it needs to do. And that's a really important step whenever we're using any kinds of AI. The risk there also though is, and is touching on the point you mentioned before, which is around data and history and knowledge. The difference between your junior and someone like yourself who's experienced. AI only knows what it knows or what it has access to.
Exactly.
And it's not good at the moment for people building things that's self-learning and self-teaching. And if it is self-learning and teaching, it's risk that it's self-learning off of its own habits, which aren't very good, or it's self-learning off of bad habits of the individual. So unless you have someone who is continually, feeding back information or has a history of data to be able to prompt and learn and teach it something, like you're going to end up with these hallucinations that aren't validated, or people using it incorrectly and bad outcomes and that type of stuff. So you did touch on the data side of things. How did you come about integrating your history and your data into, I guess, what the model is today?
Great question. And I say this to anyone using AI, particularly fund managers, because a lot of fund managers, a lot of their experience lives in their heads.
Yeah.
Like even something as simple as an investment philosophy, people don't sit down and articulate, this is what I'm looking for in a stock. Right?
I walked into a room where we were selling on the sell side, we were selling our research, and we're like, well, what's your investment philosophy? And the guy's like, he pointed up here. He was being cocky, but he was like, yeah, this is
No, people don't invest in that. Like, that's the other thing. Like,
yeah, and I think like with AI, large language models, like it's really important to articulate everything in words, in documents, so that they do understand, what you're looking for. And so we are meticulous. Everything we do is in markdown files in a GitHub repository for every single stock.
Love to hear it.
Right? Like And like even to every meeting, we'll come back and we'll say, okay, here are the meeting notes. Here's what we learned from that meeting. Yeah, we've like everything. We're basically trying to build Taurient to be our brain.
A
So
brain,
you're
yeah, second
disciplined
brain.
in doing that.
Yeah, exactly.
I'm going through the exact same process now, building out a brain. It's like, it's so much fun to do, to see how it evolves. And like, have you put mind maps on top of it as well to like, just to,
Oh, what do you mean by mind maps?
So it's like I guess a brain map, and it shows where all the interconnected parts of the discussions and et cetera. It's like, it really starts to put into perspective all of the information that you have. It's more of a side thing, not saying you have to do it, but it's really, yeah. And you can like zoom in on things and see how things connect and see how it's understanding the context between certain elements. And you can even then start to, you know, adapt if you think, oh, that connection's not right, or et cetera, and start to evolve. But yeah.
With the mind map stuff, you can either like, I don't know, connected software that does that, like Miro and others, or you can just ask the AI to build it itself, you know?
Yeah,
like,
exactly.
And speaking, because there is this question between, well, do we build or buy? And it's especially there, like, as I mentioned in the legal AI space, what are your views on the SaaS apocalypse? You know?
Ooh, here we go.
What is it for folks that maybe don't know, you know?
Yeah. So obviously all the software. So I should say, I'll tell you about the Minotaur journey with SaaS. So at the end of December last year, or actually it's the beginning of December last year, we came out and we're like, oh, a lot of software names have been heavily derated. We think there might be some opportunities there. We were long things like Atlassian, and I came out really publicly heavily about it. And literally in the space of like 3-4 weeks, we completely reversed our view.
Wow.
And not because we were being flighty, but just because the facts actually changed. So
To say,
to be short software. So we went short, which is like when you like sell a sector or think that the sector's, you know, about to fall. And so yeah, we went short software at the beginning of January, and that's because I came back from Christmas, New Year's. I, like most people, was like, you know, spending time with the kids and drinking and having fun on the beach. Thomas is like, I have coded everything. Thomas
okay.
I have like 5 new agents. He coded up a
Love
tax
it.
agent. He coded up like a PA agent who like goes through our calendar and sets
That's
our
so
moves
good.
for
That
us.
is, yeah.
And you know, he was telling me about how he saw this step change in the ability for these large language models to code and develop software. So we saw this step change from effectively chatbots to agents. And you know, we were seeing tweets from like people like Deidre Bosa, who's this famous CNBC analyst, saying, I've just coded up Monday.com. And so we went short, honestly, the whole sector. The D rating was swifter than anything we imagined. So we made 40% on our short on Monday.com in, I think, 4 weeks or something. And I think now, and like, you know, we've got to think about software was one of the best business models in the world, right? Like recurring revenues, 80-90% gross margins. People were basically banking that into perpetuity. And that's why they traded on the multiples they did. So I think the whole sector did have to come down. Now we're at this point where I think we can afford to be more discerning. And you're seeing that with how reporting season is playing out right now. So you're seeing stocks like Atlassian. Atlassian had a really good result. I think software is getting sorted into, I think the question's gone from like, will AI replace SaaS to what software will agents use and what software will agents replace? So that's where we're at now.
It's interesting on the Atlassian thing, because as much as people go, because one of the first things, like you and I, we were like, oh, we can build our own CRM. We can build our own workflow tools and Kanban boards. And like, I've been still using my own CRM, right? But the fact that the evolution of agents, as you guys have seen so closely, it turns out just like humans, and because they're trained on how we write things down and say things and think. The patterns in there turn out that you actually need, they work better when there's organizational tools. So it's like, oh, they do need workflow tools.
Yes.
And this is the amazing kind of thing. So the comeback of folks like, and I'm not saying that because I'm no investment advice from my side, not licensed, but re-looking at things in that different way, like Atlassian, actually could be valuable, because software tools actually need that sort of thing. And the learnings that they have in the experience, it's fascinating, but it's an evolving space. Do you kind of have thoughts on like a crystal ball as to like where this kind of ends up for AI specifically, and how we think about software?
Yeah, so I think like I guess the narrative around AI replacing software was around sort of 2 big things, which is, you know, using AI means you don't need as many people anymore, so you're not going to have as many seats, and that whole seat-based model is going to reduce.
Yeah.
That's the first one. And then I think the second one is if you can create something that's good enough, then you're going to have a whole bunch more competitors in your spaces. So those gross margins of like 80-90% I was talking about, maybe they go to 60 to 70%. I think that second question is still somewhat unresolved. But that first question, I think what was interesting about the Atlassian result recently is the amount of seats or the amount of users expanded by 10%. So that was like a direct narrative violation of like the seat-based compression fears. And I think it's because they've been really smart they have this collection of products in Confluence, Jira, Loom, and Rovo, which is like their AI monetization software. And the users who use that do use twice as many AI credits, and they build twice as many agents. So yeah, to your point, I think workflow orchestration and dev tools, potentially agents do need to use those. But then there's like software that's just like, human typing in instructions. That's probably the ones that are under threat.
Less valuable.
Yeah.
There will always be a space for, like you said, like it's going to be an ebb and flow in terms of what is going to be available for SaaS products, because there is, even if you're using AI to build your own agents, to build your own tools and systems, there's still a cost associated with infrastructure that goes with that. Tokens, servers, GPUs, depending if you're running things locally or not. And those costs can be quite substantial. And so the balance of those costs versus going with a SaaS product that already absorbs all that cost and you're paying $20 a month becomes a no-brainer in a lot of those instances. So SaaS is never going to go away. It's going to be eaten up, like you said, by a lot of the things like the agents and the automation. All those flows are going to be absorbed for the businesses that just can't, create that stuff and innovate as quickly as AI is doing. But it's going to stay there because of pure costs associated with everything.
Yeah, I mean, that's an interesting point, because I think in the listed world, we're more invested in the infrastructure side than the software side. So, and I know like people might think, oh, like NVIDIA, isn't that kind of overdone now? But no, NVIDIA on 30 times, it's growing earnings still by 50%, and it still doesn't really have a credible competitor in that sort of edge computing case. So I think that's fine, but it's interesting you're seeing on the infrastructure side those profit pools broaden out into things like memory and compute and power, all other stuff. So we're super enthused by memory at the moment. Like the biggest position in our portfolio is SK Hynix and Micron. Collectively, they're 11% of our portfolio.
Yeah. Memory being
like high bandwidth. HBM. And then, here's some interesting stats for you, because I think these are really cool. Samsung Electronics and SK Hynix are going to be the number 1 and number 2 most profitable companies in the world next year.
Not surprised.
And then the top 3, so Micron, SK Hynix, and Samsung, top 3 memory companies in the world, which is effectively an oligopoly of high bandwidth memory. They, if the high estimates of analysts are correct, they will out-earn the Mag 7 next year.
You're kidding.
No, I was like, blows my mind.
And those are huge companies.
The cost of chips have gone up so much. Like, so building all my own systems. I build my own computers. I've got a bunch of laptops, and I have all those running my own hosted servers with Bohr and different things, like to keep stuff local. And one of the laptops, I was like, all right, I need more RAM for this laptop because it's running a few too many things. And so I went shopping.
Yeah, what was the
16 gigabytes of RAM is all I wanted to get to upgrade this thing. And I was like, sure, $80. What I used to spend $150 for that. So I'm like, all right, $150, whatever. But then in my head, I was like, all right, if that 16 gigabytes, $150, I've got my nicer computer set up, which
does that look like?
Which is like got 64 gigabytes of RAM plus 4090 RTX. So it's a nice little AI supercomputer. I was like, I built this thing 3 years ago. Like the RAM, I think I spent $380 on it at the time for 64 gigs. It's like, how much is it now? And I looked online.
Yeah.
$1,200.
Yeah. So
in 3 years, it's gone up 4 times the price that I'd originally.
And now it looks like gold.
And it's like and now it's crazy, like the prices. So I'm not surprised that companies like Samsung, Helix, and all these other businesses are like skyrocketing, because they're not producing fast enough, but 2, the costs have like quadrupled.
Yes.
And 3, the demand is up there like super high.
Well, speaking of Samsung, this TV here, this is like the largest single screen Samsung TV in the Southern Hemisphere. As far as I was aware, like a few years ago. Yeah. Wow. Somehow they've got it in this space. We're in this XCNBC headquarters for reminding folks at home.
The FCC, the theater over in Darling Square is now
So
like
second.
4 times the size.
Yeah.
They built
So-
it recently. But
So second, but
very,
still,
very cool. Yeah.
Samsung executives have actually come out here to the studio
Yeah.
Oh,
to check it
really?
out,
Oh, that's
and
so cool.
yeah,
That's very
so
cool.
there's close ties to those guys. So great to see the name there. But listed AI infrastructure kind of companies like Nvidia. Do you think it's do you think people, talking to the investors in the room, because there's probably your investor crowd that's watching this as well. Can you say anything about do you think it's overvalued, or thoughts on that?
Yeah, I mean, obviously the hyperscalers are like spending like there's no tomorrow. I think they're talking 700 billion in capex
Jesus.
in total
I'd love to have that.
this year.
Yes, please.
I think if you listen to them, like they do not see a risk of overinvestment. Like, in fact, they're definitely acting like the biggest risk is being caught short of compute, given how much
Oh.
you've seen this AI demand go through. And I don't know,
Okay.
any chart that you see of like token usage, like everything is skyrocketing, particularly in this world of agents. And, like obviously, Minotaur Capital is like a data point of one. But for us, we have already spent more on LLMs and token usage this year than we did for the whole of last year. And
That's a
actually
sign.
we put that in our monthly recently, and one of our investors was like, "Oh, are you guys spending too much on compute? Like, are you
but
going to
look
be
at
our
the
going
profits we've had off the
concern?"
back of it. Yeah.
And I was like, "So yes, we've 4x'd our spend, but it's still way less than hiring an investment analyst."
Yeah, the
And
benefits
that
and
is
gains
that's
are
the
there.
relative, right?
Yeah.
That's how we do the cost in our head. Like, it's an investment analyst would cost us 200 grand, and our AI compute spend is still well below
shy of
that.
that.
There's a lot of room for multiple investment
Correct.
analyst type digital twins and stuff there. So that is fascinating.
Well, so with what you're seeing in the AI space, for people either in your space or people or other organizations who are moving into this, adoption of AI, what kind of advice do you have for those people jumping into that?
Yes, I think we spoke about it before, but like you can't bury your head in the sand. So there's like still quite a few like AI naysayers who like just don't want to use it, and I've done the way that I've conducted fundamental equities research has been the same for the last 3 decades. So why should I change it? And the thing is, like, the building blocks don't change. So AI still creates what's called an initiation report for us, which is like basically a detailed look into a company and everything it does. But now, like, remember when we were equities research analysts, and doing an initiation report used to take us a couple of months, and now it's built in an hour or so.
It's crazy.
And there are different, I think, if you are someone who's trying to get into this and like, okay, how do I get a large language model to build me an initiation report? You do have to experiment, because if you ask it a very blunt question, like give me an investment view on Tesla, it tends to come up with, I guess effectively a rating, like a buy or sell, and then it finds all the evidence to support that in that order. Whereas, your better way of asking that question isn't like, give me an investment view. It's saying, okay, what would need to happen for Tesla to fall 50%? Like, what are the pathways to get there?
It gives itself bias in
Yeah.
that research, right? Yeah.
And then you say, oh, okay, well, so that's the falling 50%. What would need to happen for Tesla to double? Like that. And give me the pathways for that. And then tell me what you think probabilistically out of those two scenarios, would happen, has the potential to happen more. Like, you got to ask more nuanced questions.
Yeah.
More your workflow, your actual process, rather than
Correct, yeah.
Oracle AI. No,
Yes.
it's like, here is my process. Do the work for me. So it's assistance, really.
Yes. Definitely treat it like an investment analyst, not a portfolio manager. So.
And obviously being in the space and doing a lot of investment in the space, what are you seeing as the biggest trends around AI, whether it's adoption, whether it's businesses popping up, etc., or scaling?
Yes, I think that I think everyone is trying to adopt it. I think on the enterprise side, there's too much like individual AI happening. So people in enterprises are using different bits and pieces of tools and not integrating that. There was A16Z, Anderson Horowitz.
Love those guys. Shout out.
They do this blog post, and they wrote a really interesting blog on institutional versus individual AI on this exact problem and tension, and saying like how as an institution you really need to rein that in. So I think that at the moment is something to watch in your organizations. Obviously AI adoption is going through the roof. Like as I said, like those token usage charts are incredible. We were in Shenzhen a couple of weeks ago. And like just the Chinese guys are just so enthused about everything happening in the AI world. And and technology. Still, like Shenzhen's always been a bit of a hub for technology, and like that's still in this AI world the case. And it's interesting, like the Chinese models are just so much cheaper than the Western models, and we're large language model agnostic. I think that's another sort of piece of advice for people is like, don't be beholden to one model. We use 20 different models in the back end of Taurient, and we switch it out. We don't like, that snapshot that I talked about earlier, we used to generate that in OpenAI, and then Claude got better, so we did it in Claude for a while. Like DeepSeek was really, really good at it. And, when we pass through things like those 35,000 articles, we use a cheaper Chinese model to do like the first pass of that, and then get a more curated list, and we put that list through a more expensive model, like just to kind of reduce our costs.
That's a good workflow and stuff. And I think like people, when they haven't experimented and played around with it and embedded it as much, they don't realize that one of the biggest factors is the cost side of things and the trade-offs there. And it's like, well, you don't just use Sonnet for everything or Opus for everything and run out of credits, but you balance it out with the this task is just a simple search, retrieval of articles and stuff. So we might use Haiku or something simple like that, but we need more thinking for this one. So I think that's a really good lesson and stuff for folks too.
Also understanding the costs associated with, like, for instance, with the stuff that I was talking about before, Perplexity has a high reading cost, but a really low search cost. Whereas OpenAI has a really high search cost, but a really low reading cost. So I will pass articles that Perplexity finds into ChatGPT to then do the conversion or the summarization. And instantly there I'm saving almost like a couple of dollars per page or long a set of articles.
And then you go deeper.
And then you go, if you want deeper interrogate, I will pop out to a different model.
I was just going to say, you go deeper and you figure out that, hang on a second, I could just build the search model myself or something like that. If it works out in terms of the metrics and stuff, because, isn't it like Claude Code does, like they use Claude Code, obviously, like they would say this in their marketing, but I could see how it could happen using Claude Code to build new features in Claude Code.
Yes.
So it's this snake eating itself kind of, but in a good way.
Yeah.
I don't know, better analogy and stuff are warranted there. But do you have any other kind of views on, for folks that are building in a community, or like from, that lens of entrepreneurship, people thinking, oh, it's too late, it's really hard to get into this, or I don't know what to actually build and stuff like that. I believe we're still scratching the surface, but what do you kind of have as thoughts for folks that are watching out there?
Yeah, I think just experimentation. So I did an offsite for, a big firm a couple of days ago. And I said, just to gauge kind of the AI fluency in the room, I was like, put your hand up if you use ChatGPT or another language. And obviously everyone had their hand up. And like, put your hand up if you use more than one. And most people still had their hands up at that point. But then I said, put your hands up if you've experimented with an open claw setup and have a, AI assistant platform kind of connected to your emails and your documents, etc. And there was 2 people who put their hand up. And that to me blew my mind. I thought everyone had tried an open claw type setup. Like it's still pretty nascent. So
it can be scary for people, because I think we also got the media around risk and data leakage. And so I can understand a little bit about that, but still surprising that they wouldn't have done some other things. That's
and I think I'm just on personal, like I'm not, definitely don't recommend anyone use their enterprise.
Open claw for Macquarie Bank.
Open claw, please check my bank account so give me the list.
It's gone.
And definitely don't put sensitive information in, but but just I think experimentation, there's been a bit of a reticence to doing that, that I have found really, really surprising. And the time that it takes, again, I sat with a small seafood shop owner yesterday, and he was just like, I was watching him read and answer his emails, and he was just doing it so manually. And it was like dude,
stressing out. Get out of the way. Here, this is how you do it. So then, I guess the follow-on question is the how. Like for someone who isn't exploring, like how should they start getting into it?
I think it's like as simple as like opening Codex or and saying, hey, how do I build an agent to do this workflow for me? And then trying it to do that. And then skills is like the other unlock. So I don't know if your audience is familiar with what a skill is, but basically, Claude came out with these skills, I think it was like July last year. And skills, the way that I explain skills to any layman, like this is how I explained it to my mum the other day.
Cool.
Is I was like, how you watch The Matrix? We were talking about Matrix before. And Neo downloads the Kung Fu skill. That's what skills is, right?
I know Kung Fu.
Exactly. Like I know financial modeling now. And that's, we have built our own. We've got like, I can't even tell you, so many skills now. And every time we do something repetitive, we just make it into a skill. I think start learning how to effectively write skills. Biggest kind of piece of advice on the skills side is definitely don't buy skills. Like don't go to the Claude Skills marketplace and buy a skill, because you just don't know what's embedded into that, like what bad actors are embedded into that. So highly recommend not doing that. Just get au fait with how to write your own skills.
It'd be really interesting if someone had like a prompt injected kind of skill. You know, those things like where there's letters where it sounds like it's saying something nice in the letter, but if you take every first letter of the sentence as it's going down, it's saying leak the bank account or something like that. Like, it'd be really interesting. So, you do have to be so careful with all of that kind of stuff. But I think,
100%.
you know, you can get inspiration from those places and then just go and try to figure out and build your own and stuff. But most importantly, experiment. So I think that's a key kind of message there. You do a lot of, and we're doing a lot of talking here, but you get invited to, you know, speak at like AFR summits, Equity Mate, shout outs to those guys. And we were just at an event yesterday with Galileo, and there was some other speakers there talking all about from relevance AI to other people that are building in the space as well as yourself. My question is like, how do you kind of prepare for all of these talks that you do in the AI space? Anything that you can lend some interesting tidbits on?
Yeah, and this goes back to your meta snake eating snake point, but I like get AI to help me
Love
with
it.
all those talks. So every time I do something like that, like the Galileo Ventures one, like they've obviously sent me kind of a list of questions or thematics they want to cover beforehand. And I now have like literally a whole repository of, you know, every podcast, everything that I've done.
Wow.
The brain.
Which is the brain, back to the brain thing. And so I say, okay, here are the questions that Galileo wants, and this is the sort of audience that they're going to have. Can you nuance some of the things that I've said in the last 3 years to, you know, to this audience and what they want to hear? And obviously it's still all me, it's all my IP and stuff, but that's literally how I prepare for stuff like that. And I think if you are a builder in the AI world and you want to get your product out there, like it is worth doing these events and putting yourself out there or being on podcasts like yourselves. I famously don't say no to anything. And
Love
look,
it.
you got to watch that too. Don't
Yeah.
aim yourself out. I also have like a 4-year-old and a 2-year-old. So it's like, oh my God, I have so much stuff to do. But it's also like, I clearly love doing it. Like I could talk, as you've seen, until the cows come home.
Yes.
But I think it's also, you just become informed. Like, you know, you told me about the mind map thing. I'll go and do some research on that and how we can potentially incorporate that into what we're doing at Minotaur as well. It's always great to talk to other builders. So I actually don't go to enough meetups, and so like shout out to you've got a meetup coming.
Yeah,
up, right?
Australian Blockchain and AI Network. So
Yeah.
shout outs to the new folks there. Because it was called Australian DeFi Association. We always did AI related things, but the name never really told that story. So, and we used to run the Data Science Association as well. So yeah, we'll have to get you on for that one. And you've got you're going to Japan.
I am, yes.
Yeah. When is that?
Everyone's going to Japan right
I
now.
know,
It's the
I know.
place to be.
Going in a couple of weeks. And
Okay.
so CLSA, which is like a boutique investment bank, they've asked me to present on how a investment firm can use AI to build a disruptive investment strategy. And it's really funny because I'm effectively going to be presenting to, you know, what people would say are my competitors. But like Minotaur's so open and transparent about this stuff. Like I like to say that, and we kind of talked about how quant and fundamental, like this is leveling the playing field. Like this is the fight against passive as well. So like instead of, you know, people just investing in indices, I think AI has the ability to make active funds management great again, because
Nice.
you know, you can
Let's get that on a hat.
yeah.
Not a red one.
Make funds great again.
Yeah. Make active funds management great again. What is that? Math? No,
Sounds good.
Yeah,
Matho.
the opening act for you guys, as we were talking before in the preparation, kind of the preparation, you've got an interesting opening act before you speak. Who's that?
Oh yeah, SoftBank is going to be presenting for me. So, you know, that's Masters opening for me, clearly.
That is amazing. Like after he's done, it's just like, okay, cool. We'll talk about the $4 billion that we want for our fund and stuff. Because, you know, obviously, if you guys have seen WeWork, you know, there was some famous investments that they've done there. But speaking to folks like that, how long are you actually like there for the
Yeah,
conference?
we're there for a week, and you know what, the kind of broader point around like presenting. So we've done a lot of this presenting, and this is going to sound really maybe a little arrogant, but we've spoken to so many different people around the world, and I think what's interesting is we seem to still be quite far ahead of everybody. Like, there was a guy who is part of like one of the biggest Japanese asset managers, who I think we'll see when we're over there.
Mhm.
And he runs like something like, I think it's $250 billion US dollars in his asset management firm.
Wow.
He's written a book on how generative AI is going to impact asset management. And he said that we're the most advanced people he's seen around the world. So
He's
yeah.
got good vision. Like,
Yeah.
lonely
There is
Australia here.
no doubt
Obviously,
that he's going to.
there's no tech that comes out of Australia, but
absolutely is.
um,
Yeah.
and like obviously like the Citadels and Millenniums and Balyasnys of the world are doing some stuff as well. But
Yeah.
I think we're pretty advanced. There's a Hedge Week, which is like a hedge fund publication globally. They did an article about like what hedge funds are leading the way in terms of AI, and so we feature heavily there.
Amazing.
And then actually, I should give a little like props to Minotaur, like in terms of performance, like we've done 19% per annum, the market's done 14% per annum. So I do see that AI can
performance.
help
amazing.
with the alpha generation of performance too.
I mean, this is exactly why we're here, to showcase the Australian businesses who are innovating and working on incredible technology. But it's been amazing to have you here on today's show. Thank you so much for joining us. Amazing content, amazing information. Hopefully people will have a lot to learn. Yeah, that's it from us. Thank you very much for watching, and we'll see you next time.